All right, buckle up, everybody, because today we're taking a deep dive into the world of T. Rowe Price.
I like a deep dive. That's what we're doing here.
We've got their 10K filings, 2020 to 2023, and let me tell you, these are not your average snooze fest financial statements.
Oh, I agree. These are way more exciting than your average balance sheet.
We're talking about a treasure trove of insights here. It's like getting a sneak peek behind the curtain at one of the biggest names in
All
finance.
right. It's like they're laying out their whole playbook, their strategies, their wins, even the risks they're watching out for.
Exactly. So if anyone out there thought 10Ks were just for, accounting whizzes,
Think again. This is the inside scoop, folks.
couldn't have said it better myself. Okay, before we really get our hands dirty, let's start with the basics. For anyone who might not be living and breathing finance 24/7, what does T. Rowe Price actually do?
Good point. We hear asset management, but that can be a bit of a catch-all, right?
It doesn't exactly paint the full picture.
Right. So most people probably know T. Rowe Price for their mutual funds. Yeah.
They part of their organizations.
But they're also managing retirement plans for like institutions and individuals, and they do a lot of advising too, like big picture financial strategy stuff.
Oh, wow. So it's more hands-on than I thought.
Oh, yeah. And here's the thing. They've got this whole internal system for, get this, seeding new investment products.
Hold on, slow down a second.
Yeah.
They're not just managing money, they're creating new ways to invest it too.
You got it.
Whoa, okay, so they're like an incubator for financial products. That's fascinating.
Exactly. It's like their own internal Shark Tank. But instead of pitching products, they're spotting investment opportunities, putting their own capital behind those ideas, seeing what sticks.
I never thought of it like that. They're playing both sides of the field. Okay, so we've established these guys are not your average asset managers, and we're about to dive into their world, looking at their filings from 2020 to 2023.
And those were eventful years, to say the least.
Pandemic, market swings, the whole shebang. How did TRW weather the storm?
Well, that's what we're going to find out.
Because these filings, they're like a time capsule.
He really are. We can track how T. Rowe Price reacted to those major global events in real time, and we can see how their strategy evolved.
Did they stay the course? Did they have to pivot?
Exactly. And they even made a major acquisition during this period, remember? Oak Hill Advisors.
Oak Hill Advisors, right. How could I forget? That was huge news in the financial world. They went big on that deal. But we're getting ahead of ourselves.
We are. But it's all there in the filings.
Okay, so we've got a company that's clearly not afraid to make bold moves. They're innovating, they're expanding, they're doing it all against the backdrop of, well, everything that's happened in the past few years. I'm ready to dig in, are you?
Let's do it.
All right, let's start with something that caught my eye, this whole human capital thing. They talk about it a lot in these filings.
Yeah, human capital, definitely not the first thing you think of when you think finance, right?
So human capital, it sounds a little, I don't know, buzzwordy.
It does, doesn't it?
Yeah.
But for TROW, it seems to be more than just corporate jargon.
Okay, I'm listening.
If you look at their 2020 filing, and remember, this was right when the pandemic hit, everyone was in crisis mode. They were already talking about diversity and inclusion initiatives.
Interesting. So they were ahead of the curve on that.
It seems that way, yeah. But that's something we can actually trace through these filings. We can see if it was just talk or if they actually put their money where their mouth was.
I like it. We're playing detective with their financials. So how do we track that? What should we look for?
You can look at their leadership over time, see if there's more diversity in senior positions, right? And the kinds of programs they're investing in, are they putting resources behind employee development, mentorship programs, things like that?
Got it. Got it. So it's not just about ticking boxes. It's about making real changes in their corporate culture. Okay, I've got to ask about this seed capital thing. $1 billion. That's a lot of money to throw around, even for a company like T. Rowe Price. What were they thinking?
Well, they clearly believe in investing in their own ideas.
But $1 billion.
Right.
Were they just gambling on long shots? Or was there a method to the madness?
It's definitely more strategic than just throwing darts at a board. Remember how we talked about them wanting to be on the cutting edge, spotting those new investment opportunities? This is a way for them to do that, to have skin in the game.
Okay, so they're not just waiting for the next big thing. They're trying to create it themselves. But did it work? I mean, not every seed investment turns into Google or Apple, right?
Yeah. Exactly. And that's what makes these filings so fascinating. We can actually see how some of these investments played out. Did they become successful funds? Did they quietly retire the ones that didn't pan out? It's all there if you know where to look.
It's like a behind-the-scenes look at their R&D process, but for financial products.
Mm.
Okay, so we've got a company that's clearly not afraid to experiment, to take risks in the name of innovation. But they're also realistic about the challenges they face, right? Because no company is immune to risk.
And T. Rowe Price is surprisingly upfront about that in their filings. They lay it all out there: cybersecurity threats, reliance on vendors, changes in regulations, the whole 9 yards.
They even mention the potential for tax audits. It's not exactly glamorous, but hey, it's real life, right?
Exactly. They're not shying away from the not-so-pretty side of running a massive financial institution. It's refreshing, actually. They're showing us the whole picture, warts and all.
Okay, speaking of warts and all, let's talk about the elephant in the room, the Oak Hill Advisors acquisition. $2 billion.
Yeah.
That's a lot of money to drop, even if you're T. Rowe Price.
It was a bold move, no doubt about it.
But why? Why Oak Hill Advisors? What was so special about them?
And here's the kicker. Remember that $2 billion figure? Well, that includes something called goodwill. It's basically what they paid on top of Oak Hill's actual estimated value.
Wait, so they paid extra. Why would they do that?
Because they believe in Oak Hill's potential, that's why. We're talking about an extra $2.0275 billion in goodwill alone. That's how badly they wanted in on this deal.
Okay, so they weren't messing around. They saw something special in Oak Hill Advisors. But what was it?
Remember how we were talking about alternative investments earlier? Private equity, hedge funds, all that.
Yeah, it was Oak Hill specialty, right?
Exactly. T. Rowe Price saw this huge shift happening in the market, with more and more investors looking towards alternatives.
And they wanted a piece of the action.
More than a piece, they wanted to be a major player. So they went out and bought one of the best in the business.
Wow. Talk about making a statement. Okay, we've got a company that's not afraid to invest in its own ideas, that's willing to make big moves to stay ahead of the curve, but they're also putting safeguards in place, right?
You're talking about the compensation clawbacks?
Yeah, the clawbacks, those seem like a pretty big deal. Like they're really serious about accountability.
It's one of the most interesting things I noticed in the 2023 filing. And it's incredibly relevant, too, given all the corporate scandals we've seen in recent years.
Right, like companies talking a big game about ethics and responsibility, but then
nothing happens when someone at the top messes up. But with these clawbacks, T. Rowe Price is saying, nope, not on our watch.
So these clawbacks, they sound kind of scary. Like what exactly triggers one?
Basically, they're designed to hold executives accountable for serious missteps.
Missteps? Like what? Give me the rundown.
Think financial restatements. When a company has to go back and fix its books because something was off.
Not good.
Not good at all. Or any situation where an executive's actions could seriously harm the company or its investors.
So it's like a safety net for the company and for the investors too.
Exactly. And it sends a strong message like, we're serious about ethical behavior here, and we're willing to put our money where our mouth is.
Makes sense. It's good to know they're taking that kind of proactive approach. Because let's be real, trust is everything in finance, right?
Absolutely. And that's something that really struck me while going through these filings. T. Rowe Price seems to be putting a lot of emphasis on building and maintaining trust.
It makes sense, though. Their whole business model is built on it.
Yeah.
People trust them with their savings, their retirement funds, their financial futures.
Exactly. So, yeah, the clawbacks are one piece of that puzzle. But it's bigger than that, too. It's about transparency, clear communication, and demonstrating a commitment to doing what's right, even when it's tough.
Well said. Okay, wow, we covered a lot of ground here. From human capital and those diversity initiatives to their big bet on alternative investments with the Oak Hill acquisition and those eye-opening clawback provisions. This deep dive has been fascinating.
It really has. We've gotten a glimpse into how T. Rowe Price operates, how they think about risk and innovation, and how they're positioning themselves for the future of finance.
And we did it all through the magic of 10K filings. Who knew these things could be so revealing?
Right. It's like a masterclass in deciphering the language of Wall Street.
I'm feeling smarter already. But seriously, we've only scratched the surface here. These filings are dense, and there's so much more to unpack.
Definitely. I encourage everyone listening to check out the source material for themselves. We'll link to all the filings in the show notes.
Yes, please do. Go down your own rabbit holes, see what you find, and let us know what jumps out at you. What questions do these filings spark for you? What other insights did you glean? Hit us up on social media. Keep the conversation going.
Because that's what this is all about, learning, exploring, and asking the tough questions.
Couldn't have said it better myself. Until next time, folks, keep digging, keep learning, and keep those financial engines revving.